Alibaba just dropped their latest earnings report and the market is buzzing. Baba stock is up 10% pre-market and for good reason. These reports matched expectation on both revenue and earnings, with some seriously impressive growth in their core e-commerce business and a major acceleration in their cloud segment. In this video, we are going to dive deep into the numbers, break down the key takeaways from the report, and discuss what it all means for the short and long-term prospects of Alibaba stock. Is Baba a buy after this blowout quarter? We'll analyze the data and give you our investment thesis. Stick around to find out. Alibaba reported $38.4 billion in revenue, beating estimates by 1%, and earnings per share of $2.9, exceeding expectation by 10%. But the headline numbers are just the start. The real story is in the details. Their core e-commerce businesses, Taobao and Tmall, saw a 9% growth, demonstrating resilience in a competitive market. This shows that the Chinese consumer is still spending and that Alibaba is still a dominant player. This is very important because the core business funds their other ventures and growth. It is important to see that the core business keeps growing as it is the foundation for their other segment. This is a very positive sign for investors. Now, let's talk about the real star of the show, Alibaba Cloud. This segment accelerated its growth to 13%, exceeding many analyst predictions. This is a huge news for BAVA investors, especially with all the hype around AI. The market was watching this segment closely, and Alibaba delivered. If they had missed on cloud growth, the stock would likely be down, regardless of how other segments did. Now, it's important to put this 13% growth in perspective. Compared to the massive growth rates of AWS, Azure, or Google Cloud, 13% might seem modest. However, we need to remember that Alibaba Cloud's revenue growth had stalled in recent quarters. Last quarter, we saw a glimmer of hope with 7% growth, and now we see it more than double to 13%. It's a fantastic sign. It indicates that the investments Alibaba has been making are starting to pay off. With the explosion of interest in AI and significant investment in AI in China, is it possible we see this growth continue to accelerate in the coming quarters? This is a key question for investors and a significant catalyst for future growth and a key component of our investment thesis on Alibaba. While the cloud segment is exciting, we can't forget about Alibaba's bread and butter, Taobao and Tmall. These platforms continue to be the dominant force in Chinese e-commerce. The 9% growth we saw this quarter demonstrates their staying power. Alibaba is not only a cloud player, but it is still the king of e-commerce in China. This is very important as the e-commerce segment is their core business. The growth of this segment is a good sign for investors. User growth, GMV, and other key metrics shows good signs for this segment, and it's a big contribution to Alibaba's overall performance. Beyond the earnings report, it's crucial to look at Alibaba's fundamentals, and here the picture is very strong. The company remains highly profitable, boasts a wide moat and significant competitive advantage, and is experiencing improving margins. These are classic signs of a company in recovery. From a valuation perspective, while Baba isn't trading at the rock bottom price of $60 or $80 we saw previously, it still represents a fair value for such a high quality business. We'll delve into metrics like forward P ratio and a discounted cash flow analysis to illustrate this point and compare it to its peers. You can see that in other previous videos you can find in this channel. This is a good sign for investors as a strong foundation and a fair valuation are a good starting point for a long-term investment. So, what does all this mean for Alibaba stock? Predicting short-term fluctuation is notoriously difficult, I would say impossible. However, right now there is a lot of optimism surrounding Baba. The strong earnings report, combined with a positive sentiment around Chinese tech and the potential easing of regulatory pressure, has created significant momentum. Importantly, Baba just broke to a major 3-year resistance point at $120. This is a significant technical development. Market psychology and FOMO, fear of missing out, can be powerful forces. If the good news continues, both from Alibaba itself and the broader Chinese economy landscape, we could see Baba climbing to like $180 or even higher relatively quickly. However, it's crucial to remember that this is just one possible scenario. The market is unpredictable and short-term moves can be very volatile. From a long-term perspective, we believe Alibaba's growth potential is significant. Their dominant position in e-commerce, combined with the accelerating growth of their cloud business, which is fueled by AI, positions them well for the future. Our investment thesis is based on market leadership, innovation, growth potential. We believe the future is bright for Baba. Now, I want to hear from you. What are your thoughts on Alibaba's earnings? Let me know in the comments below. Are you bullish or bearish on Baba stock? What are your biggest concerns? Let's discuss. To wrap things up, Alibaba delivered a strong earnings report, beating expectations on both top and bottom lines. The standout performance was the accelerated growth in the cloud segment, which is a major catalyst for future growth. Their core e-commerce business also showed resilience, growing at 9%. Coupled with strong fundamentals and a fair valuation, Alibaba presents a compelling investment case. While there are always risks and short-term price movements are unpredictable, the current momentum and positive catalysts suggest significant upside potential. Thanks for watching and don't forget to like and subscribe for more stock analysis. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.